Hi, good afternoon. Charles from Michigan. I had a question with regard to the subprimes. Is there a way to shift the risk of loss so that homeowners and buyers materially share in the risk, perhaps buying immediate insurance through a nonprofit charity where, like Blue Cross Blue Shield, so that the risk is put on the buyers and that insurance company so the government and the taxpayers don't have to foot the bill?
Yes, there is such a thing. It's called down payments.
It's already occurred. You do understand lots of people did put down payments. They're completely underwater. They're wiped out. Right? After you're wiped out, there ain't no more to give.
And many people didn't have down payments and were wiped out much sooner.
Bert Ely, this is a question that actually follows up on the last one. There is another way for homeowners to have skin in the game, and that is through recourse back to them personally for any mortgage deficiency. My understanding is that many states in this country, not all, but many states in this country basically have barred recourse back to the homeowners so that, in effect, they can walk away if their bet turns out badly. In contrast, my understanding is in Canada, only one province allows that. In various European countries, that is not permissible. My question for the panel, and particularly for Bill Black, is what should we bring back personal liability for any mortgage deficiency if there is a default? And if so, wouldn't that impose greater discipline on homeowners and make them much more cautious about taking on too much mortgage risk, particularly in liar loan situations?
Yeah, this is the legislation you're talking about is a product of the Great Depression, and there was a very large populist resistance to foreclosures. You may have seen some of the pictures of the neighbors would all come together and try to block the Marshall sale, or they'd try to put in all the bids and such. So that is a feature in roughly half the states. If you get rid of it, you will create a populist surge like you have not seen since the Great Depression, because you will be forcing people, especially under the revised bankruptcy code, basically into living on the streets. So politically,
in the half of the states that don't have it now. Now, what about why haven't we seen that populist revolt in the states that still do have?
If you look, it's really interesting. First, it's an odd form of predatory lending. It is predacious in some senses, but remember what you're doing is charging too little. That's the spreads narrowing, right? You weren't charging remotely enough as a lender for these things. Similarly, we talk about the foreclosure crisis, but the delinquency crisis is the real disaster in terms of the types of things we've been discussing so far. So if you look empirically, there's really good stuff on this, folks. The delinquency numbers on a graph are going up like this. Foreclosures are going like this. The industry, of course, says, well, this must be this government pressure not to foreclose, and there is an element to that. But the bigger element is that the industry coerced Kanjorski, who coerced FASB, to gut the accounting rules on loss recognition. And so now, unless and until you actually take the house back, you have large numbers of these lenders not recognizing their losses. And so I think a very significant part of the reason we're getting this split between foreclosures and delinquencies is to evade recognizing these losses. And that is reducing pressure in those states. But in truth, the more fundamental answer is almost nobody actually pursues deficiency judgments.
In the U.S.
In the U.S. And they don't for a very good reason, and that is it costs more than you get back. These people are so poor that there is nothing left by the time they lose their house. And so even in the states where we allow, as I say, that's about half, I doubt that there are 1,000 deficiency actions in even the biggest states.
All right, over here.
I want to make a comment about Bert, and this has to do with FDIC insurance. years ago, Bert actually designed a model for a privatization of FDIC insurance that would have worked. And you know who was in resistance to it? It was the weak banks, of course, because they would have been penalized in that model. But you can design a private FDIC insurance model that works. Bert did it. Okay.
As contextually accurate as your remarks are, and mostly factual arguments are correct, I think you're missing an element of tremendous anger out there. I'm just a country lawyer in New England. But there's something called positional equity. And many of my clients who are facing bankruptcy or in it and so forth realize themselves, and so do I, that it doesn't matter whether the house is underwater. It's their ability to keep the mortgage going or work something out to eventually pay it off and regain equity and continue with what the real value is, which is a fixed rent. What I object to is the idea that subprime mortgages are those which had matters cranked into them to count for that.
Do you have a question to ask?
Yes, the question is, what do you react to this? This country has defined the American dream.
The question's been asked. Do any of the panelists have a response at all? Okay.
The question is this: do you think people were irrational?
Question over here at this microphone, please.
Thanks. I heard John Allison's story before from other banks that were forced to take TARP money, and I hope you can kind of take this question a little seriously. Wouldn't it have been better for the country, for people, for the Treasury and the Fed just to loan money to the banks that needed it and to lie about it?
The Fed had all kinds of ways they could have stepped in, and if you saw this in our business, the economy was struggling. But when Bernanke and Paulson went to Congress and asked for a $700 billion bailout, and Bush said the sky was falling, the economy fell off the chart. So the way they handled it magnified the disaster. And now once they had done it, maybe they had to do something, okay? But the way they handled it made it much worse than it had to be.
There is this to the question, and there's no doubt we had a terrific financial bust and an extended panic. The problem is with lending is that if you're insolvent, that is to say, if you have negative net worth, no matter how much more I lend you, you're still insolvent.
May I ask a question now?
No, you've had your chance. You, sir, question?
This is a question for Mr. Allison. Sir, you talked about the competing financial versus industrial industries. Could you tell me if you think that the industrial market can lead us away from catastrophic failure, and what the financial industry needs to do to allow industry to make that happen?
I'm not sure I understand your question. Help me with give me an example of what you're talking about.
Can industry itself avert, if the power of industry, making new products, advancing ourselves, selling goods, et cetera, can exceed the negativity of what we've incurred from our financial demise or bad practices?
In theory, if we are so innovative and so productive, we can overcome lots of other financial mistakes. In practice, that's a real challenge because the financial system is integrated with the production process. You're seeing research and development decline dramatically right now. We'll have to have a lot of fortune in terms of people making big insights and innovation and development that don't happen in the rest of the world. So resources don't get allocated there. It's possible but difficult. Now, the most likely scenario is that we will continue. We have a very innovative economy. We're just facing what I would call a slow death. We'll probably have some kind of economic recovery, but we're probably facing stagflation, and the real risk is 25 years down the road when, if you look at the deficits in Medicare and Social Security, huge operating deficits, a dysfunctional foreign policy, big demographic problem with the 65-year-old people retiring, then it looks like Freddie Mac and Fannie Mae. You run the numbers, and you have to be very optimistic about the real growth rate to overcome that problem. It's theoretically possible, but it's really unlikely.